Let us now switch to British pound. Here we had an extraordinary move last week. We can see that the pair has been consolidating between 1.2840 and 1.35 during the whole time after Brexit referendum. Then we saw that there were two very small candles. Pound was under bearish pressure and unable to show significant recovery, and once again visit the upper border of this range. And then came a breakthrough, and I have in my trading terminal the minimum of this weekly candle around 1.2018, but I know that it is a bit different for different brokerage companies. It is, of course, important that after some correction, pound is still trading below resistance at 1.25 mark. So what happened with British pound? We had the more than 66% decline to 31-year low during the Asian session on Friday. This decline took place in minutes, and the decline happened amid low liquidity and could have been triggered by an error of some large banks trader, and then the situation could have been worsened by algorithmic trades which are done in great volume and which could have made this sell-off intensifying. An article in Financial Times also cited French President François Hollande, who said that the UK must suffer the consequences of leaving the European Union, and some analysts believed that it is the reason of the sell-off. In my opinion, what happened with British pound could have been an accident. Now this accident is over, and we need to analyze the bigger picture. The bigger picture certainly is that the British pound visited lower levels we haven't seen for ages. It means that the downtrend is continuing, and it has force, and that the market has really negative attitude towards British currency and the prospects of the United Kingdom. I believe that for now negative pressure on pound will prevail, and we won't see here some sizable recovery, some reversal. Of course, after this big move, we will see a kind of consolidation, something like the market showed us after Brexit and the following weeks of consolidative moves. We will probably see something like that in the British pound. As for the prospects, we can see that data released in the UK during the past week were mixed. On the other hand, all three PMIs of the United Kingdom, I mean manufacturing PMI, construction PMI, and services PMI, exceeded expectations. But on the other hand, industrial production contracted in August, and manufacturing growth was weaker than expected. Concerns about Britain's future have been mounting. Recent commands of Prime Minister Theresa May increased the risks of so-called hard Brexit that would restrict access to the European Union's single market for Britain, and it is a very negative prospect for Britain. There is opinion that weaker and lower rates of British pound are actually good for the UK economy, because lower pound is more beneficial for British exports. However, I must say that the risks posed by the fact that the decline of British pound was too rapid may be greater than the benefit from exports. There are the risks of increasing inflation in the United Kingdom and negative impact on the wealth of British citizens. As a result, it will be probably more necessary for Bank of England to uh, encourage economic growth through lower rates. But it will be difficult for the central bank to cut rate because of low pound and high inflation. So something dangerous may come out of such volatile moves of the British currency. The outlook for pound remains gloomy overall. There were comments that Theresa May isn't planning to negotiate special favors for financial services in the European Union exit talks, and as financial and related services sector accounts for 12% of UK GDP, it is quite easy to see why investors are so concerned about future of British pound. There was a close of the week below 1.25 mark, and this also represents a bearish factor. In the daily chart, we can see that the pound is below the weekly pivot mark, which is located at 1.2465, and below this level we are vulnerable to decline to 1.20, and a bit lower.